Dear friends, Trader Clint here once again. It's good to be back, and I appreciate your time seeing this video at the moment. Today, we want to do a brief chart study before the market opens for the new week. So it's going to be an interesting session, and you're going to have a lot of benefit, right? Of course, not a financial advice. You're going to have a lot of benefit. So without wasting much of our time, let's get started already. Okay. Now, what do we see? This is DXY, right? DXY. I'm currently looking at 2 zone. So the possibility of price going back to this zone is very unlikely, right? Though possible. We're on a daily time frame, right? Okay, let's look at the expectation for the week, right? It's gonna be a very busy week, right? A lot of high impact news. Starting for the pair I'm concerned with, right? The US dollar, the euro, and of course the British pound, right? To make things easier for me, let's just concentrate on those pairs, right? So the first news release will be on Tuesday. That's the CB Consumer Confidence number. And on Wednesday, of course, the rate hike day, the big day, 8 p.m. at time, we'll be expecting the FOMC statement and the federal funds rate release, right? And just before that, we'll be having the non-farm employment change number, that's the ADP, right? And of course we'll be having the PMI for the USD. So the Wednesday is really packed with a lot of high impact news, though that is expected to be volatile, and who knows how the price is going to react on that fateful day. We'll be looking forward to that. And of course, on Thursday, the Great British Pounds, we're expecting the rates also, right? And what else do we have? Unemployment claims, right? Then on Friday we have non-farm payroll, right? So the week is really packed with high impact news that will affect the pair I am currently looking at. So that's not a bad one, right? We expect kind of volatility always to help our predictions and of course price movement. With that said, right, you can currently see that the US dollar is already selling off, right? That is because the market is expecting that the rate hike as it stands is already heading to its peaks, right? And though the Fed says they are expecting a 5.1 benchmark for the peak, right? But we really don't know. By Wednesday, so to say, we are going to have more details as to what the rate is going to be. So if the rate is left or changed, or the rate is hiked slightly, we expect the price to keep going down, right? And if the DXY goes down, of course, you know it has inverse relationship with the pair that it's not the base currency. What I mean is, like this pounds USD, the pound is the base currency, while the USD is the pair currency. So any of the pair that it's not the base currency is expected to go up, while vice versa for the pair that the US dollar is on the base currency. So that's just a brief explanation. So if I started recording already, this a kind of what I'm expecting for the daily. You guys are familiar with my analysis. I like the 4 hours. So at the moment, if we look at two impulses that we can rightly see here, right? This is an impulse, correction impulse. We'll draw a trend line like this. Trend line broke, right? And when that happens, it's kind of hit the first target. And I did publish that on my idea page, right? You can go check it out. The first target I was expecting, right, reached already. All right, let's quickly open up the idea. This I mean, right? If I forward at the moment, price currently here, the first target was it. The second target, price bounced off the first target. So I don't know if price is going to returning back, but at the moment, price bounced off the first target, and I'm clearly seeing a clean liquidity, right, at this top here. I'm sure you can see it as well, right? This right here, a relative equal highs, right? And since the market could not maintain its downward pressure, it immediately rejected after reaching the first target at this level. I expect that next week, coupled with the fact that we are expecting the Fed to slow the rate of hike, right? I expect that the cable should be bullish, right? So I look forward to price clearing this vital liquidity, right, and reaching for this fifth zone, clearing this critical price level. That's the 1.24791 level, right? Price clearing this level and reaching for this region, right? That's based on the background that the DXY should continue bearish, right? But if otherwise, you all know the drill, right? The price is gonna go for the second target that is clearly stated here. So that is what I think is going to happen for the British pound USD. And then if you look at the Euro USD, it's kind of similar to the pound USD, right? And I'm still maintaining that there's a very high possibility price is going to reach again for the 1.08207 price level. This price here, right? Price is likely to reach for this level again before going upward. That is what I believe, right? That's what I think will happen. Will it happen? I don't know, but that's what I feel will happen. In absence of that, we should see price continue upward, right? That is based on the premise I already stated earlier on in this video, that is so many factors, the Fed hike, the unemployment number. There are various factors this week that might result to a kind of volatility, right? I want to start getting that word right. I used to say volatility. I think it's volatility, right? So I want to start getting that word right. That's just by the way. Anyway, so that's that, friend. So if you look at the daily, right? By the way, if there's any particular chart you want us to be looking at, please the comment section, or if there's any particular thing you want to correct or an impression that you would like, or an idea you have in mind that you want to share with me, please comment section below. I really appreciate. I want to hear from you, right? Last two impulses, right? This is an impulse, correction impulse, so trend line should go like this if I'm not mistaken, and the reverse use of trend line to channel it, right? This is the trend line, this is the reverse use of trend line to kind of trap the price, or kind of have a road map for the price, right? So there is very high possibility price might likely reach for it again, right? So for the daily. And if I want to measure to have a more accurate perspective, of course I can do that right away. What do we have here? Right there, right there, right there. Okay, right there. All right, so the second target is right here. On the daily time frame, price is saying there's a very high possibility it's gonna reach for this zone, right? The 1.09563 and 1.109981, right? That is what price is telling me based on my measurement. Price is saying there's a very high possibility I will reach for this level, then this level, and if there's a rejection of this level, I might likely come back to the channel again, right? That's just like one of my mentors says, price is like a fish in the river, right? It needs the water to be able to progress, right? To be able to move, all right? And also price like a tray relies on the rate track to be able to move smoothly. So we are assuming that this channel is a track for the price to move. So if price is already telling you that, okay, this is my mode of movement, I want to start moving around the channel, so you follow it, and it says, okay, I'm no longer moving on a channel, I want to start moving independently. But basically price moves on a channel, right? If after a spike price starts channeling, that is what I think Bruce made mention of that in one of his video, right? After the spike, then the channel, right? What it means simply is this is a spike up. If you notice, after the spike, price started channeling, right? That is pretty very obvious, right? If we take out this, let's take out this, and I think we should also take out this target level. Let's take out the Fibonacci. All right, this is a spike and price start channeling. So based on this assumption, there's a very high possibility price is likely to, if price rejects at the top of the channel, price is likely to test the low, then move right until price spike down again. That's like break of structure, if you will. Then price might likely start channeling again, right? Well, it's really not a tutorial video, but it's good we chip in some of these things for a better understanding of the price movement. That is for you and also for me, right? This is supposed to be a kind of my personal study of charts, right? Weekend, so it's just better we do it together, and so I learn a bit more about myself, and of course you also benefit from the lesson. So that's it. Tomorrow we'll be doing a deeper view of the price, like going then we're going down to as low as 15 minutes time frame, right? Of course we can go to the 5-minute time frame, but I won't do that with the public, right? I do that personally myself, right? But I believe 15 minutes is a good time frame that has a kind of holistic view for everybody to understand better. All right, guys, if you find value so far in this video, I will appreciate it if you smash the like button for me. It will help the YouTube algorithm to recommend this video to others. Of course, that will help me to do more of this video kind of encouragement. If I know a lot of people are seeing my video, I'll be putting more effort to providing the absolute value that everyone deserves, right? Remember, you aren't paying anything, it's totally free. So that is it, friends. I will encourage your input. Please go to the comment section. I want to learn from you, right? I want to know where I can be better in my analysis, and of course how I can be better explaining myself to my audience. Is very, very important. I just can't be talking to myself all alone or by myself and hoping that you guys are understanding. I want to know if my method of delivery is effective enough for a holistic comprehension. So guys, comment section below, smash the like button, subscribe to this channel, share with friends and family, and hope to see you tomorrow for the pre-London session open market review. Bye for now.